Hello, guys. Welcome to Crypto Capital and Financial Fridays. We used to do a lot more podcasting about crypto currencies in general back in the days, and now we are transitioning it to kind of make it more general, vague area, and that's why we have this new channel, which is Financial Friday. So, in this new YouTube channel, we'll discuss a bunch of different things for finance in terms of investment opportunities, in terms of things we can talk about happening right now in the world, in terms of general economical, geopolitical, political, and just economical understanding of the present world as well. So we're gonna go back and forth in multiple different things. We're gonna talk about oil and war trades mostly on this one. So I'm pretty interested in what's happening in the world, and that's why I think this is a very crucial time for all of us to really know, be aware about what's gonna happen. So let's just straight dig into it. So I think if you guys followed my previous videos, if you guys actually traded on previous videos, then you guys remember I talked a lot about uranium trades. I don't know if you guys followed my uranium trades. I don't know if you guys bought based on when I told you guys to buy. And of course, if you guys did, I hope you guys took some profits. If not, it's still at a good price point. So before I go further into it, everything and anything I talk about in this video is just for educational purpose only. Nothing is financial advice, and your risk tolerance is very different than mine. So please don't just copy paste my trades. Think about your own and do your own research. So uranium, why we have been talking about uranium for so long, and I have mentioned this since I guess before it was $3, right? This is when I start talking about it. $3.20, $3.30, and then just kept going up from the price point where it's right now at close to $5, and it has literally tried breaking $5 multiple times, retraced back. It has tried multiple different things, and it just keeps coming back to $5. So actually, just for illustration purposes, I'm gonna do a live trade today in front of you guys, and let's see if you guys can follow me through here. But I'm actually gonna buy uranium for $14,000. Let's see if I can log in. Oops. So I think right now uranium is giving a good entry price point, and I think this is where we can have definitely like a trade on uranium. So I'm gonna search uranium UEC options. I think I'm gonna go for May options for this one. I'm gonna go for actually $5 call, and let's see how much I'm gonna buy. I'll buy. So this is what I love about this chart. This is the chart for the options trade, and this is what I love about this website. I didn't used to use it. I only used to use this platform for hedging myself, but now I use it a lot more for just general trades because it can kind of show you the previous price off exactly that option trade where it was and where it is right now. So you can kind of see that it touched $1.10, this exact same option back 3 4 days ago, right? 2 days ago, and now it's at 75 cents. This is a good opportunity to make it back, right, where it can go back up. On the same side, let's see what UAC is trading for if you go into options for May, but it's a $5 call. Let's see if you choose a $6 call. All right, so now you guys can see it used to be trading at 80 cents, retrace all the way back to 50 cents, and this could be a good opportunity for us to kind of grab uranium and you take advantage of it. But let me see one more before we actually do a trade. I'm gonna see if you can see an option for maybe May for, let's say, $7. I know this is a little bit more risky trade. All right, so why did I compare these three? You guys can kind of see that, right? Like before the other two options, one of them went to $1.10, retraced back to 75, so difference of like 30-40%. The other one went all the way to, I think, 80 cents, and it's right now at 50, so another 30-40% difference. This one was all the way at 60, and right now it's at 35. It's actually at 30. So now next thing you want to check is the volume, right? There is a lot of volume in this. If you look at it, the bid, there's 4,000 contracts they're trying to buy. There's a bid ask for 0.30, and there's only one for selling. So you can't buy it that easily. So let me check more options on uranium. Let's go May $5.5 call. All right. So, I guess May $5.5 call, even though the difference is only a 35%, which is again great money, right? Like if it goes back to $5, you can literally make 35% by the end of Monday. So, I think we can definitely buy some of these contracts just because there's enough people trying to sell these at 65 cents, which gives us a good buying opportunity. So, I'm going to go ahead and buy right now for 20 contracts actually at 0.65. Submit by order. Yes. Accept. Accept. All right, it's filled. We are in. All right, so I just bought 20 additional contracts for uranium. Um, Actually, it's partially filled right now, which means it filled a little bit of it. All right. I have a long-term options on uranium because I think uranium is definitely a good play. And then we're gonna go dig into like why I think it's a good play. I'm just trying to place these trades before the market closes. So I'm gonna do one more risky one. I'm a little bit hesitant about this one, but let's see where it's this call doing. So April 14th, which is like literally right next to us, right? No volume. I don't like these no volume ones, but you know what? Let's just risk it and see if we can buy some. If we buy 20 contracts for $6 call at 20 cents, let's see how many of these get filled. Accept, 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 accept. I guess one of them. Okay. Well, I guess we might get some of these filled, so we'll find out about that. Let's see one more uranium options April $5 strike buys. Let's look at that one. Okay, I like this one the most because there's so much volume on this. So you know, if you're trying to get rid of it when the price does go up, you'll be able to get rid of it hopefully. So these are just for me the short-term trades. I don't like these trades as much as the long-term ones because of course the risk in these is a lot more, right? Because if they don't bounce on Monday, wow, okay, all of them got filled. Boom, I'm in. I'm in like a swimwear. So I guess this is we are in. Let's see how many of these got filled. These are filled. These are almost filled. These are all filled. Yeah, I guess we have good amount of it filled. So 1350. We can still trade a little bit more. I'm trying to like open some more trades. I just think uranium is definitely a good buy. Let's look up some oil companies too. So we still have an hour left in your market close. So I'm going to talk about uranium. But the main reason I think uranium is a good buy right now as an alternative energy source. So you guys already know what's happening with the whole Russia-Ukraine thing, with kind of China being tagged along. If you guys haven't followed the news, then I kind of will give you guys a hint. Russia and China, oil, and India. So to understand the geopolitical understanding of this war, what's happening right now is China and India is buying all the Russian oil because they're getting it for cheaper, right? Because right now other countries are putting sanctions for oil, including Germany just sanctioned 50%. They just Germany put I think a 50% sanction on Russian oil, which is going to impact a lot more exports for Russia. There you go. So they just sanctioned 50% of Russian oil importing to Germany, which was a big news because Germany is a pretty big country in Europe, and Europe is a pretty huge importer of Russian oil. Either way, but what I was gonna say is right now what's happening is this is a clear division between the East and the West. If you guys are following the news, right, where like East countries in the Eastern Hemisphere, like India, Russia, in China, they are kind of all working together to ease this war effect on Russia. And that's why if you guys look at it, that India is actually able to buy the oil from Russia for $31 discount a barrel. That's a huge discount for them to be able to buy the oil, right? Same for other countries in that area, and that's the main reason the oil is still making money to Putin, Russia is still getting funded from oil. They're still getting profited, and they're still gonna be help like making a lot more money from this. Actually, I'm gonna do one more trade here just to show you guys. Just have to turn my VPN on real quick. I think right now is a good opportunity for us to buy oil before the market closes here. So let's see if we can do that. And if we can do that, then that will also be another trade we're gonna have open during the weekend, which is always risky, but you know, sometimes you just gotta take those risks if you're trying to make those big gains. So I'm just gonna go ahead and see what oil price is at. I think if oil is not above 117 bucks and it's still floating between 115 116, I might buy some more oil. While that's loading, what I was trying to say, what I was trying to explain to you guys is that right now what's happening with the energy resource in general is everyone, including Europe and US, is really trying to sanction Russia in every way and every way and form they can, so they can start creating more pressure for Russia to not invade further or do more damage to Ukraine and try to even get into Europe, right? On the same side, Russia is very strong and their supply is very huge, and that's why they're not really scared as much. And with China and India support, they're able to function regardless. What this is gonna do long term though is Germany or Europe energy reliance on fossil fuels. So right now, Europe is relying heavily on fossil fuels like oil and natural gas to survive for their energy, right? And they really have been trying to pass more and more green deals, do more rebates for wind and solar energy, and kind of help people transition that to like more electric cars and all these things happening in the Western world. On the same side, their dependency on oil is so high that you can't just transition that in the next few years, in a matter of few years, right? It's going to take 15, 20, 50, 60, 80 years to actually transition completely into a non-dependent energy on Russia. And this is the problem which Europe is having right now, is because with all these things, it's actually impacting Europe more than anyone else, because now Europe is going to be start buying oil from the US as part of the sanctions, and they will be paying a lot more than they used to pay Russia, because the oil from the US is a lot more expensive. I hope you guys understand the political side of it too. So Europe is going to energy investment. I think I just read this. Don't quote me on this yet. But yeah, so this was very recent. They want to invest a lot of money, a fuck ton of money, like into wind and solar energy. They're saying that they're gonna invest close to $1 trillion in next 80 years into renewable energy, right? They're really trying to transition that. However, even then, it's not easy to transition all the dependency into wind and solar, because they don't produce in that big scale. Nuclear does. And nuclear energy is actually a way safer, way less impactful, and way heavier, more way condensed form of energy. And that's why I think nuclear can provide a lot more than solar can. So what's happening right now is nuclear is not really up there, right? Like, we haven't spent and invested enough money into nuclear power plants, just with all the political stuffs happening. On the same side, like, it's not just the investment side of things, it's also the political side of things. Basically, a lot of lobbying has been happening for years and years, where they're saying like nuclear is not the safest form, there's not enough research done. However, nuclear provides a very good opportunity to all these countries which have been struggling in providing their source of energy, to transition that at least into nuclear power plants. If not now, then slowly next few years. And that's a main reason I think that actually nuclear is going to go a lot more up. So if you guys didn't know, that 20% of the electricity supply was produced by 97 nuclear power plants. And in New Zealand, it's a lot more, right? But on the same side of these other countries, it's a lot less, because nuclear is still not there. It's still not being used as much as it can be. However, now every even Elon Musk has been posting about nuclear power plant, nuclear energy being safer form of energy, talking about the radiation effect is not as much as they really say. All those things gonna start creating more and more argument and good points for the policymakers to change that and actually be able to adapt nuclear energy. What's the main ingredient of nuclear? Uh, Plutonium. Trying to, I guess it's not that easy to. It's not easy to explain. Sometimes Google just plays those games with me. Okay, so uranium, right? Not this one either. So uranium is the most expensive, or I guess most used ingredient used to build nuclear power plants, and it's also is a very condensed form of energy, which is why nuclear is going to be very very high in demand very soon. And even Elon Musk has been saying this for days and years that the actual demand for electric vehicles has been going up, right? And if it keeps going up, that means we need more and more power. If we keep transitioning all these things from fossil fuels to electric, if we keep transitioning all these power grids from actual to solar, then the demand for electricity keeps going up as well, right? And for the increase in demand, we need to be able to supply that. And to supply that, if we're creating more nuclear power plants, we need more uranium. And if we need more uranium price is going to go up, right? This is a very simple article to understand why that will happen. But uranium is the main ingredient needed to produce nuclear energy. Anything that increases demand for nuclear has the potential to increase demand for uranium, and that's the main reason I think I'm a very big proponent of nuclear in general, and I think it's gonna be the one of the stocks which is gonna keep going up for next couple of years. So I do want to look at one more stock. I think this is more the ETF. Right now the stock we are trading is UEC, which is the one we just bought just now on the platform. Did I close it? Oops, I closed it. Oops, let me log in again. I was trying to see if I can go back. Okay, so UEC is a stock, and this is the website I use to kind of calculate. You can calculate your options and what do you expect to make out of them, which is really cool for me in general. It's a cool software. So if you search UEC, which is Uranium Energy Corporation, and you go to options, and let's say you want to buy make call for $5, right? And this is the one which is the high demand. It's okay, not that demand. Let's see. Try to find a safe fund which also is not like, not that risky on the same side. There's actually money to be made in there. So I can kind of show you guys how you can calculate it. Oh, there you go. This one's perfect. This is, yeah, you know what? I will look up another one. Just gonna compare to show you guys how you guys can calculate these numbers. I'm gonna go for just a $6 call. Let's just go all in. Let's just go big. Okay, this one should be good. Let's see. Okay, so 50 to 80, 30% difference. Let's see if you go here and you click on you can choose a call, so you can go and you can click on a $6 call. Or actually, yeah, let's choose $6 call, and let's say you want to buy 50 contracts, right? That's $2,500. Let's say I actually buy 100 contracts. Just go big. I'm gonna actually buy 100 contracts. And you can put a price range, and let's say you put 10 estimate returns right here. So this will show you how much money you will make based on where uranium will be on your option trade. So let's say if uranium does go to $6 by April, which is I think pretty realistic, I think it's very doable for sure, you can make close to 40-50% profit on your trade. And these are trades I look for, right? Like these are the places you can make so much money in, because this is where a lot of these trades can be profitable, like a lot. So let's say if we go risky and we choose a 14 April call, and let's say I choose a $6 call, and I go 300 contracts, and I spend $8,400, and let's say uranium does go to $5.40 or $5 even, or let's say $5.20, I can make pretty good gains. So you know what I'm gonna do? I'm gonna actually search this trade and actually go big on this one and see what happens. So I'm gonna choose the April $6 trade, and I'm gonna try to buy at least, it's at 25 cents. I think it's I'm gonna try it. There's not that much volume. There's not that much volume on that trade. I'm gonna buy 300 at 0.20. There's not that much volume though. Hold up. Trying to look for something heavy volume, because it is not helpful if you go for high volume trades, just because that can screw you not being able to sell your options. But let's say I will buy this one in front of you guys. I'll buy 250 of these at a price of 0.45. Actually 16, because there's not that much. Except, so on this option, if on Monday, there's a good chance to make about 30, 40, 50% gain on these. And that's the main reason I bought it, is because there's a very good opportunity out here on buying uranium. And I think if it does play out, then there's a good chance you can make that much money. So I'm actually gonna buy more of these. I'm gonna buy 200 and contracts. Okay. All right. Oops. I guess I can't buy this one, so I'll try to purchase 200, 0.45. See what happens. All right, it's up. Keeps happening. I gotta decrease this. I think my order is too big, so I have to decrease my order. So I'll do 150 with a price point of 45. But anyways, so this is just, I'm just placing the trades right now, guys, because the market is gonna close, and I do want to be all in. Oh, okay, perfect. It's filled. All in this uranium. So uranium, I think, provides a very good opportunity, and not just that. Uranium also has been increasing in terms of its actual research has been going up on uranium too, so people are more able to understand what's going to happen with it. But let's talk about in general war trades. So when war gets worse, right, there are things which happens, like recession comes in, because if oil goes up, things get expensive. And if you guys have talked to your people around you, even including your Uber drivers, people who work day-to-day job, or people who have businesses, which also affected by the supply chain, right? So if oil goes up, everything goes up. Oil literally is still the leading indicator for us in recession and inflation. So if oil comes right now, I live in San Diego, and let's say you live in LA, and it's right now at $8 and used to be at $4.50. If oil prices went up 100%, now think about everything. Let's say you get milk in your house, and the milk comes from the grocery store. The milk is actually in a truck. The truck has to drive from all the way from Jersey, let's say, to San Diego. Let's say, for example, for milk, for some reason there's no milk in California, for example, right? Then that cost of milk to transport is already going 100% up. Now that increases, that means not only I have to pay more price for milk, also the driver who's driving the truck, if he doesn't get paid much for the gas, then he loses less money. So his wage is gonna go up. And exactly that way, everything gets affected, and that's exactly why inflation comes in when oil prices go up. So if you're expecting the oil is going to keep going up with all these geopolitical things happening around the world, and especially with Europe and US putting more and more sanctions on Russia, and the actual reserves getting depleted, it doesn't affect us right away. There's two major factors in the oil trade. One, oil, always the demand of electricity goes up higher in summer, so we need more oil. Two, the oil is not as produced in summer as it is produced in winter time. That's two. So the supply is less, the demand is high. What's going to happen? The price is going to keep going up, right? And especially with all these sanctions and uncertainties, this is going to keep happening. Then we definitely can see oil prices keep going up to like almost $150 a barrel. Right now it's $117, $112. and that's where you can start seeing all the oil prices going up. That'll affect our personal life, day-to-day life, and that's when people start looking into other assets to hedge themselves. And that's the main reason gold has been going up in last uh, however long it has been. If you look at a 4-hour chart, I guess it looks not that good, but in general, gold went up from 1760 all the way to 2100, and now it's retracing back to 1954. I believe that gold is also going to go up. I think this is also giving a good opportunity for us to buy gold, because if gold stays in this price point, there's a very high chance like we're gonna start seeing gold eventually start making bigger moves as recession starts happening. Because when recession starts happening, the US dollar, which is US dollar index, that gets weaker, right? Inflation comes in, the value of US dollar is not that high anyways. So you know what, I'm gonna compare the same thing I did compare before, and I think a lot of you guys probably have seen this chart, but a Chinese yuan to a US dollar is the scariest chart for me, because now Chinese yuan is really trying to take care of, is really trying to show, come on, let me see, USG CNY. Okay, once I can pull this chart I can show you guys, and I think we have talked about all this stuff before, but I'm just kind of recapping all this for this video just because it's important to understand when we talk about war if exactly how things get affected. Come on. I'm going to buy gold here. Nah, I won't buy gold right now. Okay. Yeah, this is USG CNY chart. So let me show you guys the monthlies. It'll be CNY USG. Okay. So you guys can see that this is 2020 when COVID happened, right? China announced the news. We all start getting panicking. Everything started getting unstable. And since that rebound, China literally has been almost taking over against the US economy. It's very scary to think that way. On the same side, their currency has been appreciating against US dollars for almost last 2 years completely. So if this happens on a non-stop basis, then we definitely have a very good understanding or prediction or whatever you want to call it, that China has been indirectly or directly been involved in this war. And that's kind of what I think it is, and that's where the main reason I think that China is so much not against Russia as they should be, because not only they're not getting affected, they're actually benefiting from this war indirectly. So if this happens with Saudi Arabia, this was the first time this actually announced. Saudi Arabia accepted I don't know if you guys seen this, but this is very, 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 very rare, and this is huge. US dollars is the most common traded currency in the world, right? Like that's what it's used for everything, including oil, mostly oil, and everything else as well. So when the US dollar is used to trade oil, the value of the US dollar stays high because the demand for US dollars is so much higher. Saudi Arabia just said they might accept yuan instead of dollars for Chinese oil sales. That is very, very bad for the US dollar, and it's also very scary. Because if that happens, the demand of US dollars for oil is going to go down, which means the US dollar index is going to go down a little bit more further, and Chinese yuan might keep pumping. And these are things we were worried about for last 5 years, 10 years, and I think these are things which we need to pay attention to, especially if you're trying to go and invest in these kind of things, because I would not be invested in things as much right now as I used to be, just because we are very uncertain. We are very uncertain in where we stand. We are very uncertain in what's going to happen. We don't even know of how strong US dollar will be in the next 5 years. So that's the main reason things like gold go up, things like Bitcoin go up. Bitcoin also, I guess, like is not a leading indicator right now because it's still so small, but Bitcoin also pumped a little bit recently, and I think on top of that, like there's a good chance we're gonna keep seeing those growth in all those kind of assets. So it's very important for us to start getting ready for it. In the end of the video, this is kind of the end. I'm just gonna sum it up. Just look around and see the opportunities around you. I think right now the best opportunity around you, which we are all gonna miss on, is gonna be uranium. I think I've been saying this for days. I've been saying this for last couple of weeks, and I've been saying this about uranium for since it was $3. I'm gonna keep buying uranium, and I'm gonna keep buying it for short term or long term. I think you guys should consider it. Don't buy it. Don't listen to anything I'm saying as a financial advice, but at least do your research in uranium and see where it's standing. Today uranium went down a little bit, but I think uranium is going to be keep going up. Like, this is another company which I was gonna look into. It's a very small, it's smaller than UEC, but it's ETF, and it's right now at $83. So it touched $100 a while ago. This was like a couple months ago. So let's pay attention to all these things and let's just be aware. And right now, I think there's good opportunities in the market. Don't over invest into anything. Even stock market, I'm pretty pushed back. I literally don't own any stocks right now. I didn't really. I'm not a fond of stocks either way, but I still don't own anything right now just because I think it's a very uncertain time. So that's all for today. I hope you guys enjoyed the video. If you guys did, please click on subscribe, share the video to your friends, colleagues, co-workers. I would appreciate your help and support.